The other stock in focus is Vedanta. Vedanta reported its Q1 earnings. Profit and margins have beaten estimates. Revenues are in line as well. Mihika joins us for more.
So revenue saw mid-single digit uptick of 6%. EBITDA was up 55%. Margins have almost doubled, up 890 points, and net profit is up 54%. When you talk about what led to the higher earnings, there are four key reasons. Now, revenue growth was driven by the aluminium, zinc, lead, and silver segments, which both saw an annual revenue growth of 13% and 11%. Margins were supported by 5% lower power and fuel costs, and also an inventory write-back of 1,390 crores. And higher profit was due to tax write-backs of 735 crores during the quarter. When you talk about production performance, aluminium and zinc production was up 3 and 1% respectively, while iron ore and steel production was up 6 and 10% respectively on a year-on-year basis. The cost of production for aluminium and the zinc India operations have come down significantly. Aluminium cost of production is down 11%. This was due to lower commodity cost and higher efficiency. And zinc India cost of production has come down 7%. The oil and gas segment is one that didn't do very good. The production is down 17% year-on-year. And this is due to the natural decline in key reservoirs. However, the company is planning to inject $270 million of capex in Rajasthan to kind of revive the production up. When we talk about net debt has increased to 61,324. However, the net debt to EBITDA ratio has improved on a year-on-year basis. And as we know, the company has been trying to deleveraging itself, evident from its 8,500 crore QIP in July. And lastly, the FY25 capex guidance is unchanged at 1.9 billion, and the company has also approved a $280 million capex for the production capacity in Liberia.
Okay. Well, that's Vedanta for you, but no big reaction, and probably goes in line with the fact that metals haven't. I mean, yes, a couple of steel companies have done okay, but other metals haven't really had a great move. Dharmesh, did you get a chance to look at the Vedanta numbers? And because there is a demerger, plus a fundraise happened at 440, they've raised the capital as well. What's the view on the stock?
See, one view is very clear. The price is very expensive. It has risen up quite sharp. But today's this quarterly number, I didn't had a chance to look it into a further detail because of the markets, So next time when I am through with the numbers.
Fair call. Yeah, but let's see. And metals, the call per se hasn't the strongest. I would guess on the charts to the call for Vedanta would probably be the same. But the other one in focus is Tata Power, is set to come up with the first quarter earnings today. And Mihika, what can we expect from this energy giant? I use the term giant because it's recently crossed the 150,000 crore market cap mark as well.
Yes, well, Bloomberg estimates, peg the revenue growth at 10.8% on a year-on-year basis to cross the 16,800 mark. EBITDA may fall flat around 3,004 crores. Margins could see a contraction, is what estimates state, 17.8% versus 19.6% a year ago. However, net profit may rise 9.3%. When you talk about factors that could impact the earnings, and higher revenue could be because of the benefit from the drop in coal prices. Thermal and solar power generation is expected to grow, and the thermal power plants are also expected to clock into a higher plant load factor given the peak power demand that we did see in Q1 FY25. And the renewable power focus of the company could also benefit the company in terms of earnings. One thing we do need to watch out for is the capex and expansion plans for the renewable energy segment that the company does plan to ramp up in terms of its total portfolio and asset mix.